Alright, so let's talk about another semiconductor company and one that just reported earnings, which means that the earnings season is again right around the corner. So in this video, we're going to talk about Micron and their earnings report. Now, at the time of making this video, the stock is down close to 5%. Yesterday, actually, after hours, when they actually reported their numbers, the stock was only down around 2%, which was very, very strange because, well, the report wasn't that good, especially not the outlook. So we're going to have a look at all of that in this video. But first, what is Micron? What do they do? How do their financial actually look like historical wise? So we have this chart right here. And the first thing you might see here is that, well, what are those waves here? Why is it like that? So sometimes some of these businesses are very, very cyclical. So revenue goes up, then cycle dies down, goes down a bit, then it goes up again, dies down, goes up again, dies down. But it's nice to see that when it goes up again, it goes up higher. Now, as for free cash flow, that is going higher now as well. They took a huge hit back in 2019. Sales dropped a lot. So they invested a lot as well. So that's why you see now a nice little uptick here. Let's see if that can continue. Return on equity is obviously lower right now than before. The drawdown from its peak is 43%, so they're yet to join the minus 50% club. Gross profit margin sits at just under 46%, so that's fine, but obviously you would want to see that over the 50% like in the past. And cash from operations around $15 billion. Those are last 12 months. We're going to have a talk about the cash from operations in this quarter. And then total operating expenses, as you can see, it has been increasing a little bit in the last couple of years to $20 billion, also in the last 12 months. Now, two things I want to show you from their graphs from the last presentation. So one is the memory and storage growth, which is obviously the market that they're in, is fueled by diverse end demand. So there are in all of these emerging markets, well, growing markets, shall I call it, data centers, mobile, PC, industrial, auto, others, and then obviously the total right here. So you can see that the ones that are going to grow the fastest is obviously industrial and auto at 45% and at 49%, which makes sense because, well, smart factories, smart cars, which are basically EVs, that's just starting to grow at a rapid pace. But their business is pretty diversified. As you will see right here, the revenue mix shifting to higher growth, more stable and less seasonal end market, as we've seen in the graph just before. The cyclical waves, this is something that you want to see, so you won't have that huge of a dip in the future. So automotive plus industrial plus networking goes from 15 to 20%. Data center and graphics from 30 to 42%, as we've seen with many semiconductor companies. And then PC plus mobile and others, that reduces, and that's the most, well, that was the factor that impacted the company a bit negatively. And then lastly, these are some of the companies that Micron is working with. So you have the huge ones: AMD, Nvidia, Intel, Microsoft, BMW, GM, Ford, Lenovo, etc., etc. So now that we've got that little introduction out of the way, we can have a look at their earnings report. Obviously, I'm going to touch on DRAM and NAND. I'm going to explain exactly what each one is and the difference between them. But before we do so, if you want to support this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. I would really appreciate that. And make sure to check out all the other links in the pinned comment as well. Some of them might actually save you money. And to be honest, I really thank you all for subscribing and liking the video lately. You guys are awesome. Alright, so as for this quarter, first the news release note. So the CEO said that Micron delivered record revenue in the fiscal third quarter, driven by their team's excellent execution across technology, products, and manufacturing. But recently, the industry demand environment was weakened, and we are taking action to moderate our supply growth in fiscal 2023. We are confident about the long-term secular demand for memory and storage and are well positioned to deliver strong cross-cycle financial performance. So here you have a little bit of positive, but definitely a negative outlook, let's say. So for the third quarter, they generated $8.6 billion in revenue. That's up 11% quarter over quarter and 16% year over year. Now, obviously, the revenue is split into two segments here, DRAM and NAND. So DRAM basically manages your data and requires power, which is called volatile, and NAND, right here, the second segment, stores your data and does not require power, which is non-volatile. Now DRAM is 73% of their total revenue and NAND is 26% of total revenue. Now for DRAM, revenue is up 10% quarter over quarter and 15% year over year. For NAND, that increased a little bit more, 17% quarter over quarter and 26% year over year. For both, average selling price declined slightly quarter over quarter, so that remains a negative point, especially in the current market where we hear every time and time again that chips are getting a bit cheaper to be more competitive. And now the revenue per business unit, so you have compute and networking, that sits at $3.89 billion. That's up 18% year over year. Mobile business unit, just under $2 billion. That's actually down 2%. Storage up 33% and embedded up 30% to $1.43 billion. Now this is a major overview of all of their numbers. So to be honest, they missed on revenue by just a tiny bit. They missed on gross profit, gross margin, but they beat on operating income, operating margin, and adjusted earnings per share as well. Now cash from operations sits at $3.8 billion. Consensus was around 4.42 billion, so quite a little miss there as well. Now they do pay a dividend of 11 cents per share. They are free cash flow positive, and obviously they have some buybacks here as well, just under $1 billion. Another big reason why the stock is down 5%, which to be honest is still quite okay. Remember the last couple of quarters, company that missed or have reduced guidance, they are usually down 30-20% or something like that. But it remains to be seen what it does during the day. So they expect revenue to come in at $7.2 billion. Consensus was around $9.1 billion, so quite a miss of 21% there. Gross margin approximately 42.5%, a miss there as well. And diluted earnings per share $1.63. The expected number was $2.57, so a miss of 36% there. But then again, they prepare themselves because they see the weakness in the market, so they try also to reduce the expenses because, well, the high inventory and just the overall macroeconomic environment. So overall, that was it for Micron in this quarter. Obviously, they will set the tone a little bit of how we will manage the next earnings report. Right now, it seems like, well, the market priced in a lot of bad news, and that's why the stock is only down around 5% right now. But as for Micron specifically, if you do own the company, do share your thoughts down in the comments below. But as for Micron specifically, I believe they are fully prepared for what's going to come, and that's why they're already taking measures right now. This is obviously going to affect them negatively in the next quarter, but they're planning ahead already. So that's the major overview of what's happened with Micron. Do share your thoughts down in the comments below. Hopefully this earnings season will be a bit better than the last one, but my hopes are not that high. So if you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I see you all in the next video. Bye bye.